Assalamu alaikum. Hi, hello everyone. This is me, Mohammed Bilal from Commerce Department, New College, BCom second year. I'm gonna present you about the cost accounting. In cost accounting, what we gonna see is elements of costing and classification of cost, which means different types of costing. Okay, fine, well and good. Let us move on to the topic. Before going to this topic, we need to know that an introductory part. Okay, let us move on to the definition part of cost accounting. What is cost accounting? Accounting may be defined as accounting for cost classification and analysis of expenditure of total cost of any particular unit of production with a reasonable degree of accuracy. Thus, we can conclude that a costing, which means a recording of income and expenditure on the basis of any particular product. For example, a cost of making one pen, which can be an example of cost accounting. Fine. I hope now you were aware about the definition and meaning of the cost accounting. Let us move on to the main thing of our presentation is elements. What are the elements of costing? There are totally 3 elements of costing. What are those things? The first one is material, and the second one is labor, and the third one is expenses. These 3 dividing part has been divided into another part, which is called as, when it comes to material, it under direct material and indirect material, and when it comes to labor, direct labor, indirect labor, and as well as the expenses, direct expenses and indirect expenses. Let us discuss about that in detail. Fine. First element is material element. What are those material? Direct material and indirect material. That when it comes to a direct material, it is directly proportional to any particular product. For example, the raw material for building a house, we need the cement. Okay. For a cloth, we need jute. Okay. Any kind of machinery thing, we need iron. So these things are directly proportional to the particular product of any item. This is what we call as direct material. When it comes to indirect material, what is indirect material? In the material which are not a main part, but it is just a part. What are just a part? Which means the maintenance of machinery and a thing which can be as lubricant. So these are the good examples of indirect material. Now, the second element is labor cost or employee cost, whatever it may, if possible. Okay. When it comes to a labor cost, we may call it direct labor and indirect labor. What is direct labor? Direct labor, we may say that for manufacturing a particular thing, the manufacturer or the worker, we may call it as direct labor. When it comes to indirect, the supervisor, the trainee for a thing, those people we may call as indirect labor. So this is what we signified as labor cost or employee cost. Okay, fine. And now the third cost is expenses cost. Expenses also we may define as direct and indirect expenses. When it comes to direct expenses, we may say that the expenses which are attributed directly to a particular product is direct expenses, just like a royalty and expenses for a particular item. Okay, what you mean by the indirect expenses? Indirect are always called as overheads. The expenses which are indirect to the particular product is overheads, and whatever it may called as indirect expenses. Well and good. The next one is classification of cost on the basis of managerial decision. Fine. What are those costs? The cost which includes marginal costing, differential costing, opportunity costing, replacement costing, relevant cost, imputed cost, sunk cost, normal cost and abnormal cost, avoidable cost, unavoidable cost, uniform costing, engineered costing, out-of-pocket cost and manageable cost, and the last one is common cost. Okay, let us move on to the further topics. On the basis of cost classification, let us move on to the marginal costing. Okay, addition made to the total product by the production of one additional unit of output. We may summed up or summarize as follows: the prime cost plus variable cost. This summed up cost we may assumed as marginal costing. And the second one is differential cost. What is differential cost? The name itself we can find out the difference, which means a change in the cost due to a particular change in the product's activity. Okay. And what is opportunity cost? Opportunity cost means nothing but gaining of opportunity, which means next best alternative forgone. So the management has to decide a strategy whichever is possible and whichever is gainful. That's it. The next cost is replacement cost. What is replacement? Replacement itself, we need to use a particular asset or machinery up to an optimum level. After the usage of the optimum level, we may replace the certain asset. And the next one is relevant cost. The cost which are used in the terms of decision making, which may be called as relevant cost. And what about imputed cost? Yeah, the imputed cost, which means it is otherwise called as hypothetical or notional cost. Why? Means these kind of cost doesn't involve a cost which in monetary terms. It includes a decision making aspect of opportunity cost. We may compare the imputed cost as opportunity cost. And the next one is sunk cost. The historical cost are always called as sunk cost. We may need to record them in a past details. And the next one is normal cost and abnormal cost. The cost which are normally occurred is normal cost, and abnormal is on some certain conditions, whichever it may contingent or not contingent. It depends upon the happening or non-happening of a certain event. That cost belongs to the abnormal and normal cost. Okay. Now the next cost is avoidable and unavoidable cost. This also relies and depends upon the contingency of happening of a certain event. If the event happened, the cost will be avoidable, and in some cases it is unavoidable. And the next one is uniform costing. What is uniform cost? The cost which is continuous in process. It may be in the interchange of firm comparison. Okay. What is engineered cost? When it comes to engineered cost, it depends upon the input of a physical verification of a particular stock. So the relationship of a physical stock in respect to cost, that is what we call as engineered stock. Well and good. And now the next cost is out of pocket cost. The name itself refers that out of the pocket, which means a portion of cash payment to the other parties, which may be called as out of pocket. And the next cost is managed cost. The managerial cost or the programmed, which are no accurate relationship to the physical stock, but it too leads some kind of cost. The first one is advertisement. It is some kind of cost. And the next one is R&D, which means research and development. It is a future benefiting cost. Okay, so these are managerial cost. And the last one is the common cost. Common cost, which may be called as collectively, the cost which are collectively or called as common cost. We may say that consignment, yes, consignment or overhead of a particular thing for a factory or industrial cost, which may be called as common cost, whichever it terms in collective. Okay. And now this is the epilogue, the conclusion of this video. Now you had seen about the introduction of cost accounting and elements of cost, those three costs, and a list of costs which are in the managerial decision cost process. I hope you were enjoyed this session, and a very much thank you to our Dr. Amin sir. Thanks a lot, sir, for giving me this opportunity.